You probably know that you can donate your money or you can invest money in good companies if you're interested in making some positive changes in the world. But what if I told you it was possible to use your money to make the world a better place, to activate your money, whether or not you have a little bit or a lot of it? And not only that, but you could do this while still growing your own wealth. Would you believe me? For some of you, it could sound like a pipe dream to be able to change the world if you feel like you can hardly change your own finances. Even as a financial professional, I'll be honest, I was surprised to learn that there are so many ways that we all actually already have power with our money. That's why in this video, I am going to dive into 5 lessons from the book Activate Your Money by Janine Firpo. In the lessons, I'll give some examples of how you can use your money for good without sacrificing your ability to build wealth. Now, this book is tailored towards women, but honestly, I think anyone can learn from this book. There's a lot of practical information in here. And for those interested and who found this video early, I actually have 2 copies of the book. So I am going to give out my extra copy and I'll let you know at the end of the video how to enter. I'll even pay for the shipping myself. For the rest of you, I will drop the link in the description if you want to purchase the book and check it out. For those new here, hello and welcome to a community of winners trying to level up and build wealth. I am Lissa Prudencio, an accredited financial counselor and the co-host of Net Podcast. I'm all about empowering everyone to build wealth, but specifically, I want to expose this world of wealth to women of color and anyone who might not ever thought that wealth was possible. Let's jump into those lessons. Number 1, you can make the world a better place by learning your money story and aligning your financial decisions with your values. That's a mouthful, so I'm gonna break it down. Your money story is your thoughts, your beliefs, your feelings about money. When you think about money or you make decisions, you are looking at the world through a specific lens, and that lens impacts your behaviors, what your decisions are. You have to understand that your beliefs and your relationship with money is unique and different from every other person out there. That money story is formulated by so many things throughout your life. It's influenced by other people, by society, by your own past experiences, everything. So how does knowing your money story help you use your money for good? Well, when you know your money story, you are bringing awareness towards your own habits and behaviors. So it's kind of twofold. Number 1, you understand your money story, and that's going to allow you to have agency over your financial decisions. And then number 2, once you have that agency over your financial decisions, you can use your money aligned with the things that you care about in the world. So there's this whole growing field called values-aligned investing, which is a major concept that is covered in this book. What it means is that you use your money in investments, in companies, and in causes that you personally care about. You want to invest in those companies that care about the same things as you do. So this diagram covers what are called SDGs, Sustainable Development Goals. These are a set of 17 goals that the United Nations ratified in 2015, and they decided were important for the sustainability of Earth and humanity. So in theory, you want to support companies with your money that also care about the same things you care about. Is that quality education or gender equality or decreasing worldwide poverty? And on the flip side, you want to make sure you're not supporting the companies that support causes you don't believe in. The thinking is that if enough people do this and invest aligned to their values consistently for the long term, then the power of everyone's money can do good for the world. But to bring it all back, it all starts with your own self-awareness and your relationship with money. Because if it ain't right within, how are you gonna win? Shout out to Lauryn Hill. So, how can you learn your money story? Here are some questions you can ask yourself, or you can even journal about these. What does money mean to you? How does money fit into your life? What are your beliefs about money? Where do you think your beliefs about money came from? Do your friends have similar beliefs about money, or are their beliefs different? Why do you think that is? What does thinking about money make you feel like right now? If you had unlimited money, if you were a billionaire, what would you use that money for? What would you do for yourself, your family, your community, or the world? As simple as it may seem, literally knowing your own money story will unlock your ability to both build wealth for yourself and to build a better world. Lesson number 2 from this book: to use your money for good, you can put your money in values-aligned banks or credit unions. So I kind of referred to values-aligned investing earlier, which typically when people hear the word investing, they think about the stock market. But here's the kicker. Here's something you'll definitely learn if you check out the book. There are a lot of ways to use your money for good besides the stock market and investing in stocks that you are aligned with. You can choose to deposit your money in places that are aligned with your values. So let's dig into that a little bit. You know how you put your money in a checking account or a savings account? Usually, this is at a bank or a credit union. The book actually also covers CDFIs, Community Development Financial Institutions, which can also be a bank or a credit union. But for most people, they tend to bank with the bigger banks. In the United States, the big 4 banks are JP Morgan Chase, Bank of America, Wells Fargo, and Citibank. So not surprisingly, I actually currently have financial products and services from 3 out of the 4 banks on that big 4 list. Call it what you want, but you know what? I am now learning how I can better put my money in places aligned with my values. So here's a simplified version of what happens when you put your money in a checking or a savings account. In our minds, we put our money at a bank or a credit union, and that money is placed in a box or a safe, just waiting for us to withdraw it. At most banks, it's typically a smooth process to get our money out on a whim when we want to take it out. But that's not what's happening. Our money is not just sitting there. What's actually happening at these banks is they're pooling everyone's deposits, all of the money. They're holding on to a little bit of it in case, a couple people want to hit up an ATM and get some money out. But for the rest of the money, they're out there using that money to make money. For example, banks offer mortgages, home loans to people. They'll let people borrow money to buy a house as long as those people pay back with more money, with interest. But it actually gets way more complicated than that. These banks do offer products and services to individual people like you and me, but they are also investing that money into corporations, into governments, into infrastructure, into a lot of things that, quite frankly, because these banks are so big, it's impossible for us as individual customers to know what they're investing in altogether. So we're talking about trillions of dollars of deposits being used to support companies, governments, causes that we just don't have any insight on. They might be investing in things and companies that we align with, but more often than not, they're also going to be investing in things that we as individuals probably don't align with. Now, does this make you a bad person to bank with the big 4 banks? In my opinion, no. Otherwise, I'd be calling myself a bad person. But what I want you to know is this. You can be a customer buying a product or using a service like a bank, and if that service works for you, then cool. But you should also be aware that there are other places to deposit your money that are arguably just as safe as keeping that money with the big banks. For example, so there's a website called mightydeposits.com where you can actually look up banks and get a high-level overview of what they are investing in. You can see if what they invest in aligns with what you want to support. Like, do they invest in fossil fuels? And if they do you still want to bank with them? How much money goes back to local communities? If they don't give back to local communities, do you want your money with them? And only you can make that decision. So I will admit, I always fell victim to the myth of thinking that smaller banks or credit unions was like so risky, and if I put my money there, I would just lose it. But how, right? Is it that they're more likely to go out of business? Like, sure, that can be a risk, but that's actually a risk for any bank. So in terms of the logistics of depositing money, in the United States, if your bank offers deposit insurance, which is FDIC insurance at banks, or NCUA insurance at credit unions, then what it means is that your deposits are federally insured up to a certain amount, usually $250,000 per account type. Now, if the bank or credit union goes under, you'd end up getting your money back. So logistically, there are ways to bank at places not at the big four banks where you still have that security around your money. And if I say small bank, don't just assume it's like a tiny corner store bank, right? There are tons of banks out there that are huge, they're just smaller relative to those big four. So real quick, I want to talk about some high-level pros and cons to depositing money in places outside of the big four banks. So let's talk more, smaller local community banks. Number one, sometimes there are less options for in-person branches or ATMs. Like if you bank at a local bank, you can't expect to drive across the country and find a branch there to take money out of. But just so you know, oftentimes local banks have ATM networks, which means you can withdraw money at certain ATMs, either for a small fee or no fee at all. It just depends, and it's something that you would have to learn about. Number two, another potential downside to these smaller banks is less financial products and services provided. So like if you want a one-stop shop to get your bank account, a credit card, a mortgage, a business loan, more likely than not, those big banks will have it all. For smaller banks or local and community banks, they might have some products, but they might be more limited. All right, so let's talk about some benefits. So obviously, banking with a local bank or a community bank could mean that there is more transparency around where your money is going. Is it going back to the local community to support small businesses? Or they might even invest in bigger businesses as well, but it might be more accessible to find out if they're investing aligned with your values. Another benefit is sometimes you might get more personalized service or better customer service at a community or local bank. And number three, you can get competitive products at these local or community banks or credit unions. I think there's a myth that if you don't bank with the big banks, then it's going to be hard to get like a good interest rate on a loan. And that's just not true. Sometimes local banks and community banks even have better programs to support the local community, which might mean better access to products that are going to be great for your situation. So the key takeaway here is this. There are many options to deposit your money in places that are better aligned with your values if you want to go that route. You can also do both. Like, yes, that's going to give you more accounts to manage, but at least it gives you agency with where you put your money. Maybe you can test it out and, for a year, bank at both a big bank and a smaller bank and see how you like it. Now, I know I kind of went in depth on this one, but believe me, if you read this book, there is a lot more information and guidance around this topic that I didn't get to cover, and it gives you a lot of practical information. All right, before we hit the next 3 lessons, if you're enjoying this video, please don't forget to hit the like button and subscribe. It helps out my channel, and of course, I appreciate it. Lesson number 3. There are many places to keep your money besides a bank account. A lot of personal finance information and education online defaults to the standard places to keep your money: a checking account or a savings account, and if you're smart, a high yield savings account. It all makes sense. These are the most common and safest options to store the money that you don't want to use. And lucky for you, we already covered in lesson number 2 how you can deposit your money with values-aligned institutions. You should know there are so many other places to put your money. Beyond checking accounts and savings accounts, there are things called cash equivalents or cash alternatives. Quick disclaimer, I tried to look up the difference because there's apparently a slight difference between these two terms, cash equivalents and cash alternatives. I could not find consensus online, so for purposes of this video, it's okay, you don't have to know the difference. It just goes to show how confusing finance can be, and a lot of times there is no consensus. But just know that these are things that kind of fall somewhere between putting your money in a bank account versus putting your money in the stock market. There's a lot of other places you can put it. So you might have heard some of these cash equivalent options like certificates of deposit and money market accounts. These two types also happen to typically have deposit insurance, FDIC insurance. However, there are pros and cons to using accounts like this. For example, if you put money in a certificate of deposit or a CD, this is considered a time-based deposit. This means you might not be able to touch it for a certain period of time, but what you get in return is you might be offered more interest on it than your money just sitting in a high-yield savings account. Now, beyond FDIC insured options, there are other places you can keep your money. Now, I understand why a lot of these don't get talked about. I think when people remove the FDIC insurance part and your deposits are not insured, it feels like you're throwing money into a black hole, that you're just exposing yourself to this unnecessary risk. But let's be reminded that for the most part, there's a spectrum. The lower risk you take, the lower reward you might get. The higher the risk, the higher potential reward. So cash equivalents and cash alternatives, they fall somewhere in between these two. Now, even though these things might not have deposit insurance, I'd argue that they are closer to the low risk end. Examples might include money market funds, treasury bills, treasury notes, and others. So that's an overview of cash alternatives and cash equivalents. Now, in terms of how to use your money for good beyond checking accounts and savings accounts, there are cash alternatives that Janine mentions in the book that are specifically designed to offer you some kind of return on your money while supporting some social impact or community initiative. I'm not going to go into detail in this video, so you can check out the book if you want those examples, but these include things like CDFI loan funds, C-notes, worthy bonds, and so much more. As a quick reminder and a disclaimer, these are all financial products that come from financial institutions. At the end of the day, they may carry some risk, but I don't think that should stop you from exploring. To build wealth, you are going to have to take some risks. The key is that you do some research, you learn, you build confidence, and you feel empowered in your decisions when you take calculated risks. And this obviously applies to when you are values-based investing and using your money for good as well. Now, the thing is, the more you learn about more financial products and services, it's going to get scary and complex. Like, you're going to not know how to navigate it all, and it might even turn you away from doing it. But what I want to tell you is try not to let it. When all else fails, if you really care about building your wealth as well as investing aligned with your values, you can always turn to professionals for assistance. Which leads me to lesson number 4 in this video. You can get help with values-aligned investing. Not all financial advisors are the same, and there happens to be a growing number of people who are becoming financial planners and financial advisors and other types of financial professionals who care about their customers and who care about making positive changes in the world. In the book, Janine covers the ins and outs of how to research advisory firms and how to find individual financial advisors who can support your goals to invest in a values-aligned way. So let's dial it back a little bit and give a quick refresher to those of you who might be new to investing, or maybe you just invest in the background, like an automatic deduction into your 401k, or maybe you invest in a robo-advisor or something that's more low touch. So a financial advisor can be a person you hire when you need help with your finances, and typically that means when you are ready to invest some money. I will point out that financial advisor is a broad term. Like an insurance salesman can call themselves a financial advisor because it does relate to finances. That said, many financial advisors are investment advisors, which means they help you invest your money if you don't want to research and buy your own stocks, your own bonds, your own securities, and other types of investments. So, for example, if you've saved a bunch of money, maybe you've got an inheritance, a settlement check, a big refund from your taxes, and you want to start investing, but you're too scared to go and open a brokerage account and buy your own stocks. You can instead find a financial advisor. You'll talk to them about your goals in life, and they're going to help you invest your money in a way that's aligned with those goals. They're going to want to know, when do you need this money? In 10 years or in 40 years? They're going to want to know your risk tolerance. Now, keep in mind, working with a financial advisor does not remove all of the risk from your investments. What it does is it gives you a professional, someone who's been trained to help you create a balanced, strategic, and diversified portfolio, which, with all of those things combined, should help limit your risk. So in the book, Janine covers not only how to find a good financial advisor, but one who is going to honor your goal of wanting to invest aligned to your values. For example, if you tell them, I don't want to invest in companies related to manufacturing guns or to fossil fuels, they're gonna honor that and they will still find a way to create a great portfolio for you. Financial advisors do get paid, so typically they will either charge you a fee or maybe a percentage on how much money they're investing on your behalf. This is pretty standard, but I just want to point it out because obviously, very little things in life are free. Last but not least, lesson 5 that I pulled out of the book is values-aligned investing is not perfect, but it is possible. So the book goes way in depth on so many paths that you can take if you want to use your money for good and if that is important to you. It also covers the risks to consider. I actually think values-aligned investing is probably more art than science because it is a growing field and seeing the returns on it is a long-term thing, right? It's not going to happen overnight. Now, another thing is, as with most things in life, there are bad actors out there. For example, the book mentions things like greenwashing, which is when corporations or financial institutions make these big claims about how they're providing social benefits and doing good for the community and good for the world, when they either aren't or maybe they just simply don't have a way to prove that they're doing that. It's going to be nearly impossible to dedicate every last dollar of yours towards things that align with your values because it would be a full-time job trying to track every single investment, every bank or financial institution that you have an account with. But I think simply being exposed to this world of values-aligned investing and knowing that you can have agency in how you use your money, that your money does have power, I think it can kind of plant the seed and show you that you have the option to take small steps if you want to use your money in a values-aligned way. Plus, I think learning this is going to go a long way in women collectively using our power to build wealth and to build the world in the way we want to. So, did you learn anything from this video? Are you interested in learning more? Like I mentioned at the beginning of the video, if you are watching this early, I'm going to drop a link in the description of where you can enter to win my extra copy of Activate Your Money. And for those who missed the giveaway, don't worry, there will be a link in the description if you want to buy the book yourself. So this is not a sponsored video. I'm actually just a fan of the book and a fan of everything that Janine Firpo is doing to empower women and to change the world. I had the opportunity of meeting her at a conference last year, and I do support the nonprofit that she runs. So she runs a nonprofit called inveseting.org that has a membership program and so many resources for women who want to invest aligned with their values. Not to mention that membership costs less than the price of a Netflix subscription. All right, until next time, peace out.